I'm back, boys. How are we doing, man? How are we doing? We're back with the trading transformation video. And look, I owe you guys an apology. I'm sorry. I'm sorry. Straight up, I'm sorry. Sorry, haven't posted on this bitch in like a month. And I've been posting some fire ass content for sure. That's honestly should be really beneficial to you guys. But I haven't been posting on this. And I'm not gonna sit on here and make up no bullshit excuses. I'm not gonna do it. I'm just gonna sit down and say, I'm sorry. But we're back. And we're gonna teach you guys something that I've been using for honestly the past, I can't even remember how long it's been. And again, y'all are gonna clown me because I thought I found out this shit on my own. And turns out it's a fucking ICT concept. But and again, I haven't seen ICT's fucking video on this, so if I'm explaining it wrong, I'm not trying to explain it the way that he explains it. I'm gonna explain it how I understand the shit for what it is. Cool? Cool. So, today, we're going to be talking about something that ICT calls a BPR, which honestly is like he's nasty with those 3-letter fucking change ups that he just pops in there. Oh yeah, that FVG. Me, ICT. You, BPR. You know what that means? Baroque bitch syndrome. I don't fucking know. But anyways, this is combining pretty much inverse fair value gap along with fair value gaps to just pretty much encapsulate a imbalanced price range. So before we even show this on the charts, I kind of want to give you guys an idea of what this would be. So let's say we have a violent move. Damn, bro, already lagging out. We have a violent move up and we form like a bullish imbalance right here, and then we have like some movement over here, and then we see price, boom, get another violent move down, and we form, boom, a bearish imbalance here. That's like, or here, I'll make it a little bit less like fucking crazy. Bearish imbalance right here. Okay, and we see, boom, this is imbalance price action, and this is imbalance price action. When we see a bullish imbalance get formed and then disrespected, along with, once it gets disrespected, seeing a bearish imbalance form or overlap with that bullish imbalance, we can safely assume, sorry, I didn't even realize the microphone was just moaning in your ear. But what were we talking about? But we can safely assume and say like, hey, imbalanced price range, this whole price range right here is imbalanced. So what can we expect if price comes back up in this bitch and we start seeing downward movement? It's going to continue lower. Is it something fucking special? No. Is it something that is even necessary? Not really, but it's just another confluence, you know? And this is something that I've been mentioning a lot in a lot of my trade recaps and on kick streams, which if you haven't tapped in with, I don't know what the fuck you're doing. And yeah, it's pretty much just two fair value gaps that overlap in the opposite direction, showing us just a super solid, super awesome imbalance price range that price will more than likely want to come back and balance out. Cool, so let's show this in action on the chart. Okay, yeah, so like this is a perfect example right here. So right here, right, we see this, boom, violent candle to the upside. And mainly for these guys, we're not fucking on Foot Finder, like trying to zoom all the way the fuck in and catch the toes of like an itsy bitsy spider fair value gap, okay? We're not trying to do that. We're looking for like the dick size candlesticks, you know what I'm saying? Barry Woods on this guy. All right. You know, this is TJR. This is like Giannis. All right. So we see this bullish imbalance right here, right? We see it gets tapped into, whatever. That's not even what we're talking about. And then we see, boom, price, like, Lil Uzi Vert flooded the face. Now we have this big ass bearish imbalance right here, right? You see the part where the bearish imbalance and the bullish imbalance overlap? Yeah, that's the part that we want to, boom, identify. And that's what our BPR is. It's pretty much saying, hey, from here up to here, that's our really high quality imbalance price range, because we see two fair value gaps that got formed, right? But what is the actual imbalance price range? It's where they overlapped, because we can see on this, price got balanced out down to this wick, and down to here, price got balanced out down to this wick, essentially, because we see price flood all the way through there. And as we're pushing back up through here, it also gets balanced out. This was also a news candle. Okay, but we can see that this works perfectly right here, right? We obviously get a little leg up and then boom, consolidation, but we can see the tippity top is boom, where these two fair value gaps overlap, okay? Let's find another example to show this off. Let's go down into the smaller time frames. And you're probably asking, how do you use this? I'm not necessarily looking at these on a high time frame. Again, we can apply any of these confluences whenever the fuck we want on whatever time frame. But most of the time when I'm using this, it's more so during entries. So how about we scale down to like an actual area where it would be beneficial. Okay, so let's see if we can see anything going on in here. Again, I mainly use this for entries, so we'll see here. Okay, yeah, this is a great example right here. Boom. So right here we see, okay, dick candles up, dick candles down. Again, in comparison to the 4-hour chart and those news candles, it's nothing too special, but it's at least something, okay? We see right here, this is the bullish imbalance. Damn, I don't even know if that hit. Ooh, it didn't hit it. We have this one as well, though. Okay, so we have this bullish imbalance, this bullish imbalance. Both of them get invalidated after this candlestick. And then we have this bearish imbalance right here. Honestly, we can go ahead and leave both of these babies on here. Okay? Because they both overlap. This, we could honestly just like bring this one up so it's just the sliver right there. Okay? But we can see price pushes back into where the bearish imbalance overlaps the bullish imbalance, and it barely misses this top one right here. and then price continues down. And again, what's the difference between using this and a fair value gap? Again, it's not much, right? We very well could have just used this bearish imbalance, but it's higher confluence because we can see, hey, this is a much, I guess, higher attracted area where price is going to want to fill its imbalance, because not only do we have a bearish imbalance, but we had a previous bullish imbalance, and price is still moving swiftly through that area. So when we move swiftly through it to the upside, we're like, okay, cool. But then when we move through it swiftly to the downside, it's like, okay, this whole area right here. Sorry, I realized the microphone was still up a little bit too high. This whole area right here is still imbalanced, and price is going to want to come back through and balance that out. Let's try and find another example of this. Let's just go ahead and throw this on another trading day. Put it on Friday. Friday's price action was pretty shitty, but we can still kind of show this right here, even though this wouldn't necessarily have gone in our direction. Again, we're trying to use this for entries, assuming that there is an entry within here. I just kind of want to go over how we can identify these things. So right here, again, similar situation. We have a bullish imbalance right here. Bullish imbalance right here. We have another one right here. The bullish and the bearish imbalance right here are pretty much dead fucking even. And then we have another bearish imbalance right here. Okay, we can leave this here. We can shrink this guy up to where it overlaps. Boom. And then we just have a more centralized area where price is likely going to react off of. Again, this is whatever, speculative, because don't even know the bias going into the day. But yeah. Oh, this is like a decent example. Let's see if we can go in on the 5 minute here. Oh, damn. Wait, did I completely remove? Okay, so on the 5 minute here, we have this bullish imbalance. Or sorry, bearish imbalance. This bullish imbalance. Boom. Shrink this down. Boom. We can see that this is like just fucking optimal range, right? We see swift move through, swift move through. Also beneficial that we see a lot of consolidation. Again, we have liquidity sweeper. Okay. But boom, we can see price comes back down into this area, ripper. Okay, let's show some more examples on higher time frames. Let's see here. Might be difficult on the daily. Let's go in on the 4 hour here. See if I can see any obvious ones off rip. This is a good one. Okay, so right here, we have boom, super swift move up. Right here, super swift move down. We can boom, shrink that up to where they overlap. Mink, boom. This is our high quality imbalance price range. Okay, let's see. This is another one right here. We can see swift moves up, swift moves down. There's a whole bunch of fair value gaps within here. This bullish one, this bearish one, and this bearish one doesn't fit with the bullish one. So we can actually just leave this right here because the bullish one fully encapsulates that. So that's the one that we want to be targeting. Boom, price bops its head into it, flush work. Okay, let's see. But as you guys can see, these things are like all over the place. Similar example right here. Bullish and a bearish. Boom. Okay, we have big flush up, big flush down, shrink this bad boy so it's a line. Okay, price pushes up into it, flow to the face to the downside. And again, keep in mind, this is going to be used with bias in mind. This is going to be used with finding the optimal price range on like the 15-minute to 5-minute time frame to look for entry, right? We're looking for like liquidity sweep, then we're looking for break of structure, and then when we are able to scale down to the lower time frame, like our execution time frame, that's when we can use these to our advantage. Is this something that's like make or fucking break? We need to use this in our trade? No. But is this something beneficial that you can use as extra confluence? Like, hey, there's a fair value gap right here, and there's also a fair value gap right here, and I don't know which one I should choose because right now it's in this one, and it looks like it's going to go down, but it might come up to this one, and we also see a big-ass bullish imbalance that's like right here. Boom. Shrink work, delete. This is the most likely area that price is going to be looking to fill. Why? Because there was a bullish imbalance along with a bearish imbalance. This is the most imbalanced price range. Cool. That pretty much wraps it up, boys. Trading transformation day, who knows what, locked in. I'm gonna try and get more of these out to you guys. And once again, I'm sorry, guys. Sorry, plain and simple. No excuses, nothing. Just a simple message. I'm sorry. But the plan is to keep getting a lot more content out to you guys. Keep giving you guys solid info, okay? Solid free information on YouTube, TikTok, Instagram, all of that shit. And also keep you guys fucking entertained at the same time. Oh, and on Kick. We're doing fucking everything. Also, Mastermind 4.0 spots are still available. So if you guys want to get tapped in to a little personal full month education with your boy, link is in the description. I appreciate you guys. Again, I'm sorry, but I love you. All right, peace out.